I thought it might help if I just gave you an idea well, not an idea, exactly what we do. And if y'all bear with me, we'll just work through this. We lend only on real estate secured by a title insured first lien. We don't do second liens, we don't do any inferior liens, we only do first liens. And we'll finance up to 70% of the purchase on purchase money loans. In other words, if someone's buying a property, we don't care what that property is. It can be anywhere from their residence, their homestead, to a vacant lot, to raw land. We don't care. We'll finance 70% of the purchase price, even on raw land. And because our theory is that if you're buying the property, you must have a good reason for that. And I'll explain why I say that a little later. When we lend on the refinances, we'll do 70% loan to value on a borrower's primary homestead, 70 on their secondary homestead, 65 on investment property. Now understand, these are refis. This is not purchase. On purchase money, we'll do 70% of anything. On 65 on commercial, 50 on lots in a platted and recorded subdivision. And then on unimproved property, we'll only do a third. Because if someone comes to us and they got a piece of rural property out in the middle of nowhere and they want to do a cash out, well, that's not a good loan. It hadn't proven to be a good loan for us. And most lenders are very cautious. I know most of the hard money lenders I know basically have the same rules. Some of them will do 50%. But it'll run anywhere from 33 1/3 to 50%. And then as far as terms go, on owner-occupied homes, we'll do a 5-year loan on a 30-year amortization. Non-owner occupied, we try to do those for 3 on a 25. On commercial properties, we usually do 3 years on a 20-year amortization. And on unimproved properties, we'll do 3 years on a 10-year amortization. On all amortizing loans, we require an escrow for taxes and insurance. But occasionally, if the LTV is low enough, we might waive that requirement. And then on fix and flips loans, we will waive escrow payments. On an interest-only loan, 12 months or less, we waive escrow payments. If the loan is over $500,000, and it's a commercial property, we ask for a phase 1 environmental study. And of course we want a survey on all loans, and we usually want an appraisal. If the loan amount is $250,000 or less, we might waive the appraisal. We'll take just a broker's opinion, a broker's market analysis, and waive the appraisal. On fix and flip, we'll do 70% of the combination of the purchase price and the construction budget. And I gave an example. Say you're buying the property for 70 and you're going to put 30 in it, that's a total of 100. We'll do a $70,000 loan. But we require that your money goes in first. So at the closing of the $70,000 purchase price, that's when you would bring your money and we'll make up the difference. But then for the rehab budget of 30, if you need a draw to get started, we'll do a draw. And then as you're doing the rehab, many times you'll take some pictures of the work and send the pictures in and tell us. And we prefer to wire it to your account because you can call us one day, you're going to have the money the same day. Because we realize that working capital is important to y'all, so we're not going to hold you up on that. Let's see. Now, and I will acknowledge that there are lenders that'll do less than 70% to a rehabber. We just believe that if you're too highly leveraged, that's when you run the risk of getting in trouble. And we like for our borrowers to have some skin in the game. And for every rule, there's always an exception. So while these are our guidelines, Do we make exceptions? Yes. Yes, we do, But every situation is different. Now, we're not too concerned about credit. We want two things. We want you to have equity in the property, and we want to be comfortable in our own right that you can afford to repay the loan. And that's to your benefit, because there's, in our businesses, there's a term called loan to own. We're not in that business. We don't want to own your property. We want to get paid. And the best way for us to know that we're going to get paid is for you to prove to us that you can service the debt.